Assalamualaikum and good morning to Madam Farini binti Morni. So today, our group will present about the impact of dividend policy on shareholders' wealth, the comparison between KLCI and Emas Index. So, for our topic outline, we will cover 5 chapters.
The dividend policy refers to the policy of a company that specifies the amount of dividend payment and the amount of profits retained for reinvestment in new ventures. This strategy is linked to breaking the company's profit into new opportunities between payment to shareholders and reinvestment. The Malaysia stock market today, also known as Bursa Malaysia, is one of the biggest stock market in Southeast Asia. The KLCI contains 30 firms from the main market, where it is also the main index and as a market indicator in Malaysia. Other than that, KLCI also contains the selected 30 largest companies from the main board by full market capitalization from Bursa Malaysia. They are also among the most liquid firms and have a large percentage of free floats. This means that they have a good mix of institutional, retailers, and insider investors. Because of this, investors can confidently invest in the KLCI to increase their wealth. As for FTSE Bursa Malaysia Emas Syariah Index, it has been designed to provide investors with a broad benchmark for Sharia compliant investment. Bursa Malaysia partnered with FTSE to provide a suite of index for the Malaysian market. As a result, Bursa Malaysia launched FTSE Bursa Malaysia Emas Syariah Index on 21st May 2007. The index series covers all stock sizes within the market and provides the investors with a better tool to benchmark their investments. The index are also suitable for the creation of investment products such as ETFs, derivatives, structured products, and index tracking funds.
My name is Nazati Shima binti Bujang and I am from BA 2425B. Next, let we move to the problem statement. The impact of dividend policy on shareholders' wealth remain controversial issue. The harder we look at the dividend scope, the more it seems like a puzzle that just don't fit together. To our realization, there are very few studies that distinguish between Sharia and non-Sharia compliant on dividend policy. As echoed by Yakub and Jacob 2002, there is a lack of study that measures comparative performance between Sharia and non-Sharia compliant stock in Malaysia. Therefore, this research tried to fill the gap by distinguishing between dividend policy on Sharia and non-Sharia compliance and explore whether there is significant relationship between dividend payout ratio, earning volatility, and profitability with shareholders' wealth.
Assalamualaikum and salam sejahtera to Madam Farini and to all my fellow classmates. My name is Muhammad Ismail bin Shahrun and today I will be presenting about the literature review of our research report. So there are some few points that I will be presenting today, which is for the first point is, according to Mokaya et al. 2013 studies the impact of dividend policy on market share price in the banking sector of Kenya by using National Bank of Kenya. The researcher used a primary set of data of 100 shareholders from a target population of 47,000 shareholders of the National Bank of Kenya. This research evaluates the working of the stimulated model using ANOVA, while multiple regression evaluates the test model data to illustrate the association between dividend payout and also market share value. The next point is, based on Billings and Morton 1999 and Michelson et al. 1995, Earning volatility is described as a risk factor or something that is strongly exposed to a risk factor in an equilibrium position. This causes investors to increase the return needed to adjust for this degree of uncertainty in earnings. Earnings volatility is a business-dependent and known as a diversifying risk. It is also a business-dependent and labeled as a systematic danger. However, from the perspective of the consumer, there is a systematic risk. It is stated by Campbell and Shirler 1988. Their findings suggest that the long-moving average of actual earning is important and positively used to estimate the current potential dividend. For the third point is Altan and Arkan 2011 study the relationship between financial structure of the firm operated in the manufacturing industry and their firm value. The quarterly data obtained from 2004 to 2007. 127 companies are in the ISE Zubin Index. The result reveals that there is a favorable association between long-term debt and firm worth by multiple regression study of this result in the SPSS program. The higher proportion of long-term debt in overall debt would dramatically raise the firm's valuation. Then, stock liquidity aimed to boost firm performance. Feng et al. 2009. Liquidity would stimulate and draw more knowledgeable buyers to access the capital market and expand the number of informative stakeholders. Nevertheless, they are not supporting for firms whose operating performance theories are based on an agencies. According to causative hypothesis, liquidity would provide a positive relationship to company output in the absence of causative agency theory. If there is an existence director myopia, the liquidity would not raise the firm's output. The last but not least is the decision to pay dividends begins with firm profits. Hence, it is logical to think that profitability as a threshold factor and profitability level as one of the most significant variables in explaining dividend payout policy. According to Emam Golipor et al. 2012, the purpose of this analysis is to evaluate the relationship between the capital structure and the company performance assessments measures with data from the Tehran Stock Exchange. On the basis of this analysis, 400 firms were chosen from amongst the companies listed on the Tehran Stock Exchange and 12 industrial groups were sampled between 2006 and 2010.
Thank you, Ismail, for explaining about the chapter 2. For the chapter 3, I will explain more about the methodology method. So firstly is population and sampling. Quantitative data in terms of secondary data is used in this research. In this research, the total of 23 years period was taken, which between 1997 to year 2019. And undertaking the 30 companies from KLCI and 30 companies from Emas Index. Thus, the total of observation is 1,380 and the data was taken from Thomson Reuters data stream. Quantitative analysis has been used so it can accurately determine the relationship between two variables, whether the variables are positive or negative. So secondly is data collection method. A sample of 60 companies from KLCI and Emas Index listed in main bracket Bursa Malaysia was selected. This research paper is applying multiple regression for a period of 23 years by taking 6 independent variables, which is dividend payout ratio, earning volatility, long-term debt ratio, profitability, liquidity, and also leverage, and shareholders' wealth as dependent variable, which represented by the earning per share. So this is the variable that we use in this research. So firstly is earning per share as the dependent variables in this research. The independent variables is earning volatility, long-term debt ratio, profitability, liquidity, dividend payout ratio, and also leverage is the independent variables. So in this research, we use 5 types of analysis. So firstly is descriptive analysis, secondly is regression analysis. Thirdly is correlation analysis. Fourthly is normality test, and lastly is Durbin-Watson statistic. And this data we run using Stata software.
In its original form, descriptive analysis was carried out on all the variables. From the KLCI index table, we can see that the dividend payout ratio is distributed between negative 40.6% to 3.77% and a mean of 37%, while for the earnings volatility, it is distributed between negative 0.12 to 0.61% with a mean of 8%. As for Emas Index, we can see that the dividend payout ratio is distributed between negative 13.58 to 454% and a mean of 135%, while for the earnings volatility in Emas Index, we can see that it is distributed between negative 0.56 to negative 0.52% and a mean of 5%.
We go to the correlation analysis. Correlations is used to detect that whether have correlations problem among the variables. So the first table is correlations for KLCI. Based on the result as stated in the table, the highest pairwise correlations is 88.46%. It is between long-term debt ratio and leverage, while the lowest pairwise correlation is 78.74%. It is between long-term debt ratio and liquidity. And the second table is Emas Index. Okay, based on the result as stated in the table, the highest pairwise correlation is 40.95%. It is between long-term debt ratio and leverage, while the lowest pairwise correlation is 0.18%. It is between dividend payout ratio and return on equity. Okay, it can conclude that the model in this research does suffer from serious correlation due to the highest pairwise correlations lower than 80%.
Next is regression. For KLCI regression, it indicates that 13.82% of the variation in the earning per share can be explained by explanatory variables, which is dividend payout ratio, long-term debt ratio, leverage, liquidity, earning volatility, and profitability, whereas the remaining 86.80% cannot be explained in this model. Based on the coefficient table, it indicates that there is significant relationship between dependent and independent variables.
Meanwhile, for the multiple regression of Emas Index, so based on the Emas Index full model regression, it indicates that 87.87% of the variation in earning per share can be explained by the explanatory variation, which consists of the dividend payout ratio, long-term debt ratio, liquidity, leverage, earning volatility, and also the profitability ratios, whereas the remaining of 12.13% can be explained by another factors. So for the coefficient regression, it shows that there is significant relationship between the dependent variable and the independent variables.
Hi, Assalamualaikum. I'm Nurul Shazlin binti Sulaimin. So I would like to thank my teammates who has explained more about the chapter 4. So let us proceed to the next chapter, which is chapter 5. On this chapter, it will conclude all the data findings and the discussions. So let's take a look at this table of major findings. Based on the major findings of KLCI, it can be concluded that both earning volatility and profitability are positively in a significant effect on the shareholders' wealth in Malaysia. Both variables in the regression result shows the p-value of a regular significant level of 0.1. Meanwhile, for the other independent variables, which are the dividend payout ratio, long-term debt ratio, liquidity, and the leverage, are all insignificant with the p-values of more than 0.1. On the other hand, it is a major findings of Emas Index. It can be concluded that there are several variables that is resulting a positive significant effect on the shareholders' wealth. Those variables are the earning volatility, long-term debt ratio, liquidity, and the profitability. However, for the other both independent variables, which is dividend payout ratio and the leverage, are all insignificant with the p-values of greater than 0.1.
And the major finding from the Emas Index data. So from the data, it can be concluded that only liquidity ratio and the long-term debt ratio positively have the significant impact on the shareholders' wealth in Malaysia. It is because from the full variable regression result, the p-value for both ratio show a regular significant under level of 0.1. Meanwhile, the independent variable, which consist of the leverage, profitability, earning volatility, and the debt payout ratio, are all insignificant with the p-value greater than 0.1.
Let us proceed to the last slide, which is recommendation and the conclusion. As for the recommendations, the future studies suggested to expand the field of research in companies other than Malaysia's. Besides, the action of dividend policy can be understood after undergoing of the research in different companies. In addition, there are disparity in terms of number of sample size among the companies in the different countries. The larger the sample of size in the result may improve the accuracy of the results. In a nutshell, for the both KLCI and Emas Index, there is no relationship of a significant effect of the dividend payout ratio towards the shareholders' wealth. But therefore, for the both KLCI and Emas Index, there are two variables that have a significant effect towards the shareholders' wealth, which is the earning volatility and the profitability. And that brings us to the end of our presentations, and I would like to thank you, Madam, for your time and your attention. Take care, stay safe, and